Is inflation transitory? What does that even mean? I think the Fed made that up. Or is it sticky? Is it here to stay? Or is it just kind of a flash in the pan and we don't really need to worry about inflation? I've got updated perspective coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So the Fed, I believe, invented the term connected to inflation. They defined it themselves of transitory inflation, which is, the Fed's got to use their words very carefully. They choose them very carefully because they don't want to spook the markets. They don't want to make markets overly optimistic. And obviously all of Wall Street, and you would even argue much of the global economy, hangs on what the Fed says. So when it comes to all of this money they're printing, they're saying inflation will be transitory, which means it's not really going to be a permanent problem. If we print a whole bunch of money and you see prices go up, we're actually glad about that. If we see prices spike, we expect that to be temporary, okay? And so is that the truth or not? So Kevin Korhorn and many economists actually would say inflation isn't prices going up, it's the dollar going down. And the more dollars that are printed, the dollar per, each dollar is worth less. That's just, not looking at the open market and how things are trading every day. That's just kind of macroeconomics. I don't disagree. That's absolutely valid. But to me, what can your dollar get you? And that is where I very much focus on, well, what are the price of goods? How are those prices changing? So is inflation going to be transitory? Is it going to be permanent? Is it going to be sticky? Let's look at it. Number one, commodity prices have absolutely fallen like a rock, like a falling dagger from their all-time highs. If you look at lumber, we've talked about that significantly, and we've done some videos on that about how much it would cost to buy enough, a certain amount of lumber to build a house, and how those prices have absolutely skyrocketed. And look at what's happened to lumber in the past month. It's absolutely plummeted. This would be a perfect time for a dad joke of saying timber or something like that, but I'm not even gonna go there. Okay? But come down significantly. What about copper? What about, other commodities? Copper, same thing. It was at an all-time high. It's come down significantly. What about steel? Same thing with steel, okay? But it's not just metals and those sorts of things, even food prices as well. So if you look at corn, that price obviously gone way up, come back down. Soybeans, same. Wheat, the same. Not going to show you all those images, but you get the gist. Prices were absolutely skyrocketing from the beginning of this year, really since last year, by the way. We'll get to that. But they've absolutely been skyrocketing until June, and then they've come down significantly. Why have they come down? I think a couple things. Some of the supply chain stuff has been sorting itself out. But then two, the Fed has come out and said, listen, we do see inflation possibly being more permanent than we originally thought, but we still believe it's transitory, that it's not going to be this issue. And that the market has responded to that. Commodity prices have fallen significantly. Here's the problem with this oversimplistic assessment that the inflation then just won't be a problem. And number one is if we pulled up each of those charts, and instead of looking at the past 6 months, we looked at the past 5 years, you would see that these prices remain extraordinarily elevated to where they were 5 years ago. And for inflation, in my opinion, to be just temporary or transitory, prices wouldn't just need to be falling from their all-time highs in May. They need to fall significantly further to get back down to where things were, several years ago. So that's the first problem. And then the second problem is this idea of transitory inflation or sticky inflation. And I'm not going to get into these super technical terms. No, really, there is that is lingo in economic speak is sticky inflation. Things like rent. Rents have been going up significantly. What about housing prices and house values? That has gone up significantly. Used cars, right? Down a little bit, but still elevated significantly. What about the cost of services? Still elevated significantly. And if you figure out, well, how are those cost of services derived? Part of that is vendors and suppliers, those sorts of things for other services, but it's also input wage costs, which we know have been elevating and have risen and likely will continue to do so as we're trying to attract and bring people back into this very challenging and stubborn labor force. And so to me, those are all signs of sticky inflation, and those don't turn on a dime like we've seen with lumber and with copper and steel. Who knows if they will? Who knows if they will? But we've got commodity prices that have absolutely whipsawed, gone straight up and are coming down significantly, very sharply. We haven't seen the same in some of these more sticky areas like rent and other asset prices and even service prices. We haven't seen that just yet. And typically, those don't whipsaw. You could almost throw the word typically out, though, because this is all new. It's all extraordinary. We haven't had a pandemic where we've shut the world down and then printed a gazillion, quadrillion dollars and seen what happens. Hey, let's just, what's going to happen here? So this is all very much experimental, but those areas are typically more sticky, more permanent, not as transitory. So what does this mean? What do you do? The jury's still out. There's no verdict yet. We don't know what is going to happen with inflation. And I would not say that this quick rise and then quick fall of commodity prices is exact evidence. But I would say the markets, the free markets, if there is such a thing these days, usually get this stuff right. It usually does. Doesn't get it perfectly right, but it usually gets this stuff right, okay? The market got the drop in last March, that got that right, of course, and then the immediate recovery and the bottom and all that stuff, it's gotten that right so far as well. What it didn't get right was subprime, right? The market was believing subprime was contained, believing that the government was right when they were saying don't worry about it, and the market got that wrong. And all of a sudden, as dominoes started to fall, the market dropped significantly. And so, but typically the market's track record, the Fed's track record, by the way, is typically not that good. Lots of recessions, people believe, end up caused by a misstep of the Fed. But the market usually has things right because of how markets work. And right now, the bond market is suggesting inflation's not really a big worry, which is a complete 180 from where we were, 2 months ago. So the bond market, so we don't know, of course, but the bond market is saying not something to worry about. We'll see. We'll see if that changes. For you, I would tell you two things. One, make sure you're working on your budget, okay? Make sure you're working on your budget. If your income has gone up, your income has changed, if your spending has changed a little bit, gone up, gone down, gone sideways, whatever, this would be a good time to just tune in, update your budget and say, here's how much money is coming into the household every month, and then here's where it's going. And I would look at maybe the past 6 months to see, all right, are we trending in these spending categories? Are we trending in the right direction? Are we trending accurately or on budget? Okay, that sounds really geeky, but I would. If we are going to see inflation or if it's going to pause, now's a good time to update your budget. But then the second thing is, if we are seeing inflation, here's another thing I would tell you to do. Understand that, and this is even Econ 101, this is like basic level of econ, there is some control that we all exert over how inflation impacts us. Yes, you don't control the price of a TV or the price of a new house or whatever, but you do have choice. And they call this, in economic terms, they call this substitution. And the best example that I can give is, for me, when my wife and I go out for a meal, or when I go out for a meal, I sort of expect, my meal should cost about this. And if I'm in the mood for steak, but steak costs this, I will likely say, well, then how about chicken? I could eat chicken. That sounds pretty good. If chicken costs this and it's still not to that level, all right, well, what about a sandwich? I mean, a sandwich sounds kind of good. Okay, yeah, that's in that range. All right, I'll get that. And you might say, well, you're crazy, Mike. And I wouldn't disagree with you, but we typically, I mean, this substitution, that's within your control. And if you say, you know, I want to buy a house, or within my budget, a house gets me this. That price tag gets me this type of house. That's one way of looking at it. The other way of looking at it is, I want X bedrooms, X bathrooms, I want these features and whatever. That used to cost this, now it costs this. Who cares? That's what I want, right? So we all have some ability to say, no, this is the price I'm willing to pay, and I will substitute whatever I need to in order to continue to pay this price. And so if, as you're working on your budget, if it's not in alignment, you know, look at where you can substitute. Going grocery shopping in different places, buying different things, whatever. Look at places that you can substitute so that you're still managing your finances in such a way where you're reaching your long-term, short, intermediate, and long-term financial goals. Work with your CFP, update your budget with them. Talk about, okay, am I on track with my goals? Do we need to adjust, or can I avoid some of this substitution because I've got room in my budget? So work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, corehorn.com. That's Corehorn with a K, wisemoneyshow.com. You can find us there as well, or send us an email, info@corehorn.com. All right, there you have it. Go out and take your next wise step in your financial life.